Good morning. My name is Tanya Henderson, and I have my friend Stephen Chinsky with me here this morning. How are you doing today?
Good morning, Tanya.
Good
JETS, let's
morning.
go. Football season. Let's everybody get pumped up.
Oh, I'm a Cowboys fan. I'm sorry.
Uh, okay, we're in the dungeon anyway. We're in the bottom of the barrel anyway when it comes to football. So, hopefully a good season this year. That's all that matters.
Well, that's what's important. And you know what? The Cowboys don't win either. So, you know, it's been a while. So, yeah. Not a fair weather fan. Been a fan for a long time. So it is what it is.
It is.
Awesome. So, we are going to talk about our third session of fixed assets today, which is going to be the transactions. So exciting.
It's going to be good. It's going to be good. We're going to go through all the different types of transactions like one would do when it relates to fixed assets. So it's going to be fun because people, we'll go through, we'll talk about it out loud, and I think we'll banter back and forth a lot.
I and again, Steve is going to tell me where I'm going to navigate this mouse, and we're going to do lots of transactions and depreciations and write downs and all that fun stuff.
Correct.
All
Yeah.
right. So, are you ready to go?
I'm ready. Let's have some fun.
All right. Awesome. All right. So here we
Let's,
are in our
yeah.
Kronos company. So I will go ahead and bring up a fixed asset. Are we adding a fixed asset, or did we already do that last time? I can't remember.
Let's bring up the list and then let's go buy one. So let's bring up one of these. Let's bring up one of these asset cards. Let's see where we are on anyone that we pop. Okay, so this one we bought. So let's go back to another card. Let's go backwards and I don't know,
How
maybe
about
the
the
cup.
cup?
Yeah. Oh, the cup,
Oh,
seventy
we're
dollars. We bought that one.
wow.
Um,
I may not have one that I didn't buy.
Oh, we can always start over. So if we bought them all, we bought them all. It we've been playing around so much. I think we let's just yeah, let's
Mm.
just start off. Let's start off fresh. Let's do a new one,
Okay.
and we'll just quickly add. We'll hit enter so you get the next asset number, and let's type a description. Anything you want to buy today. You pick an item you
I'm
want to
gonna
buy,
buy an iPad today instead of an iPhone. All right.
and then from
Okay.
in the drop down list, you can pick your class. We want to make sure we pick a nice. Obviously it's a tangible asset because and then you can pick a subclass from the list we made last time. So
Uh
you
oh.
know,
How about equipment?
yeah, make it equipment. It's good. Um,
Okay.
in the depreciation book area, obviously, we always want to do straight line because we're talking general accepted accounting principles. So for the
Hmm.
company, so it'll default the company book. Because we set that up the last time, remember when we did our first session, by
Yep.
setting up the class subclass, it'll self default those answers for you because you chose equipment. So let's just make believe for conversation's sake that depreciation is going to start. We'll pick 8/1 just for giggles. We're in the month of August, so we'll just pick the start. 8/1, and we'll just do that date.
Whoops. Oh, I must not be, my work date must be set back to April. All
Ah,
right.
it's possible. It's Kronos. We always know that. And let's make believe again. It's just an iPad. So again, let's just say it's a 3-year asset. So typically, we'll just type three, and then at that point, we're pretty much done.
Mm-hmm.
So notice the blue line flashed up top. It's like, boom,
Ah,
you are ready to acquire. And here it's the funny thing. This is one of the new features in Business Central that came out a few waves back. It's a way to buy an asset from an asset card, not from either a journal or a purchase invoice, which we'll talk about in a
mm-hmm.
second. But it's a cool little toy, I call it, because it is. It's a
Mm-hmm.
way of getting that acquisition value right into the books. And again, you're on the fixed asset card here. So remember, it's going to push you through to actually buy this asset, which is a nice, easy way of doing it, don't forget, rather than jumping to other screens. So let's follow what it says. Let's click the word acquire. Let's see what happens.
All right, and I do want to add one thing in there, which I have noticed, and I've been playing around in this a lot recently, and I know this doesn't really have specifically have anything to do with fixed assets. But if you go to the settings in your in BC and you look at say change when I receive notifications, this is one of the notifications that you can actually turn off. That little notification that pops up at the top. Here's your fixed asset acquisition wizard right there. So if that does bother you, you can turn that off.
Excellent
I've
tip.
been
I mean, this is going to continually grow. I have a feeling
I
that
know.
as BC and as everybody, users and partners, and everybody keeps putting more thoughts into the what they should do to enhance it every more and more, you're going to get more and more pop-up notes and notifications.
Yep, absolutely. So this is that acquisition wizard here. So I'll just say next on that. All right. So
So
what am I
what
posting to?
Yeah, so let's think about this. So what do I want to post this acquisition to? You've got a GL account, which sounds okay. You've got
Mm-hmm.
a vendor. Do you owe the vendor money or not?
Mm-hmm.
And also, a bank account really means that the money just comes right out of the bank. So when you think about this, what it's asking you is, where is my entry going to be booked to? So in this case, I mean, let's say for conversation, just let's leave it for now. Let's pick a GL account just to make it
Okay.
simple for us.
So that
And
would
we'll
be
pick
more of like a clearing account, right?
direct.
Okay. All right.
And then it's going to look for it's going to obviously look for what's this account supposed to be. So we can pick something. And again, we don't have to be perfect. We can pick equipment. We can pick whatever we want. Um, and
I'll
again,
just prepaid. That looks
yeah,
good.
prepaid is good. Obviously, we don't need a currency because we're
Right.
U.S. dollars here. But again, if it was a foreign currency, you'd pick it. But we can move
Mm-hmm.
forward here. So, how much did you just spend for that iPad? I mean, how much did you really pay?
$1,200.
And then let's make it 8-1, right? And
Mm-hmm.
again, no currency. So we'll click next.
Okay.
And now it's saying that's it. You're done. Everything's all done. And it booked everything. And then when you click finish, it will reopen the FAGL journal to book the entry for you. So
Okay.
let's click finish and see what it does.
Do you think there's a somewhere I noticed the sliders grayed out? Do you think there's somewhere in the settings for that or it's just grayed out?
It's going to be
Not sure.
automatically grayed out because your company book is set to be GL integrated. If you turn
Okay.
the GL integration off, then it will basically turn itself off.
Okay, got it. All right, so let's hit finish. And now,
And there you go. You have your entry. You have it. I think we were playing around with the iPhone the last time, the $500. So
I'll
let's
delete
delete
that
that.
one out.
I think we play around so much here. I think we keep
I
forgetting to
know.
see our own entries.
Yep.
And here it is, a simple entry. We're going to debit a fixed asset for $1,200, and we're going to credit a clearing account, make believe that you booked. And again, it is that simple. It's a nice, clean way of getting your subledger updated and getting the general ledger updated just in one click and using the wizard. Um,
Awesome.
there's pros and cons in this. I think for the most part, I mean, if you did get a purchase invoice and you have to pay the vendor, obviously people would say go to the purchase invoice. But you know what? Let's just click post and move forward, and let's see what
Okay.
life's like if you did get that invoice.
All right, so I'll just post that. Oh, hold on. Because the posting date or okay, because we're in Chronos, it thinks I'm out of my date there.
Ah,
Ooh,
let's see. Posting account was. Oh,
God, I
let's
love Chronos.
yeah. Let's check what that. Let's go back and let's open up account 10600. It's possible that it's being pig-headed.
Yep.
Uh,
Let's see if I can get to there from here. I'm really bad at that. So this right here is this lovely posting group. Not sure why there was a posting group in there. Let's try
yeah.
that. And let me just
That's the
cancel that
one
and
thing
I'll
about
try to
Corona.
post it again.
Yeah, I will say there's a lot of weird settings when it comes to setting up Chronos out of the box for a demo database. And now we just
Oh,
need, Jen, what is
oh.
it? Posting account must either, let's check the chart of accounts again. It's possible that we just have a,
It's that lovely little purchase option.
let's see what
Right.
we got. Um,
Usually.
um, take away the tax group code if you don't mind.
Mm-hmm. It's
And because we're
usually
not,
looking for this guy right here, I felt like, but it's blanked
yeah,
out,
but I don't,
so
it's direct posted, so that's fine. And everything looks
mm-hmm.
good there. It's a prepaid account. Nothing else is needed, so it should let you go through
Should
now.
post.
Yes, let's go through one
If
more
not, we're
time.
choosing a different account.
Up now, we just need a posting date. The post. Let's check the general. right? Because following general business.
Oh, you know
Uh,
what? I have seen this in the past where since the entry is here, there's actually one there on the line.
yep.
So
So
I'm
let's
actually going to
re-enter it.
delete it. Yeah, I'm going to delete that entry and then I could probably go ahead and put that back in. Does it?
Yep. Just add account type as GL in the fourth in the column to the left, and make that a GL type, and then put the 10600.
Oh, sorry.
Yeah, no worries. And we can just move forward, and then negative 1200. And I
That
bet
should be
you,
good.
yep. And I think you'll get it should go through.
So what if I needed to post that? Could I go back to the other screen? You think?
No,
Yeah.
the wizard.
Yeah, I wonder if the wizard probably wouldn't run again.
Oh, it would if if you delete this and go back. I
Okay.
actually think it would not because I bet you if we went back to the fixed asset, the blue notification might have already disappeared because you ran
Mm-hmm.
it. But
Yeah.
actually, that'd be kind of cool to try. I
Yeah.
wonder if you deleted the entry, would it go back to saying to itself, "Nobody ran the wizard yet. Try now."
I
I
don't know.
guess maybe there's a boolean setting or a true false setting that says the wizard would run, the wizard was not run, but um, I mean, obviously you're here. You see it up
Mm-hmm.
top. It's still there. I think maybe it's one of those like every other setting where you can run it again until you say, "Please don't show me this message anymore." So
Maybe.
that is
Oh, now it went away.
now went away. So that's because it's so. I bet you because it's so money. It said, "Ah, something's been acquired." Like the refresh, like if you refreshed it or something like that.
Right. So now I can see my entry over here.
Yep, and you've got the entry. It's in there. It's showing you we put the money in the clearing account. That's again one way to bring in a fixed asset. Now, again,
Mm-hmm.
it's a nice, easy wizard. Prompts you through it. It's pretty straightforward. Um, Several people take other approaches to it. I mean, one way is just use the FAGL journal, which is the entry you were just on because you saw how to go in there. Some people just go that route and just say skip the wizard and jump right into the FAGL journal because what's the point of doing the wizard if I'm going to end up there anyway? Um, and I believe if it doesn't come up, try it. There it is, fixed asset general GL journals. I always forget some words are FA, some words are fully spelled out fixed assets.
Yeah. So when you're in the fixed asset module, FA or fixed, I know it depends on what you're typing.
Yeah,
S-
there's no rhyme, no reason why
No.
some of them were abbreviated, some were not. It was just I think whoever coded the software just went down
Yep.
that path. It's
Whoever
probably
was
for
coding that day.
for space.
So what's
So
the difference between a fixed asset journal and a fixed asset GL journal?
that's a great question. So the fun part here is this. So there are many people using Business Central that
Mm-hmm.
actually will let the fixed asset system just stand on its own 2 feet, meaning they just want it to run and never touch the general ledger. So they'll just let the system stand there, and the accounting people will take care of the accounting side of the general ledger. So FA journals are a way to post anything you want, just like you do in the fixed asset GL journals, to the subledger, but just never touch the general ledger itself. So
Okay.
you can buy an asset, type in fixed asset journal, add the asset just like buy that iPad, $1,200. It's there. You can depreciate it. You can do a whole bunch of things. It's never going to touch the general ledger, which means that those two, that subledger to general ledger, will have to be reconciled manually a lot to make sure that the two are totally in sync because they're not posting together anymore and they're now separated. So by separating them, you've actually, it's two systems here running simultaneously, but you're really going to have to reconcile it because they're not integrated and posting together.
Got it. And I have had people in the past in GP who actually never posted their to the GL. They actually ran it separate. I don't know why, but I've had a lot of people in the past who did that. And in GP, it was a separate posting step that you used to have to do. So you would do everything in the module and then you'd actually have to say go to the GL posting to do it. So in here, the difference is you would either do a fixed asset journal or a fixed asset GL journal.
Yep. That's the difference. It's just one, it's actually one journal difference and then one setting difference because in your depreciation book, you're either
Hmm.
saying integrate me or you're saying don't integrate me. And it's really that simplistic. If you say integrate
Right.
me, you'll have to go one path. If you say don't integrate me, you're going another path.
And depending on if you have those turned on, that drives which of the journals you use, right?
Oh yeah, 100%. And
Okay,
if
that
you
be
if you make a mistake, it's going to yell at you anyway.
right. So if I'm entering those beginning balances, that's when I would use the fixed asset journal, and I actually turn off the integration, use the fixed asset journal and add those assets and then turn them back on.
You hit the nail on the head. That is the
Okay.
most optimal way of doing it is you book everything through a fixed asset journal when you're turning on the fixed asset books for the very first time, the
Mm-hmm.
subledger, and then you turn back on the integration and then you march forward from there.
Awesome. Okay. All right. So which one are we going into?
So let's do this. Um, we let's go into an FAGL journal. Well, actually, we already were there, so let's have a little bit more fun. How about what if we go to a purchase invoice
Okay.
and let's buy an asset? And again,
Okay.
I know we're gonna say, let's do a new document. Let's buy it from
Whoops.
whichever vendor you would like to.
We're going to buy it from Sprint. It's always my favorite. All right. So 8-1. Oh, well, Sprint's got a bunch of junk down here because it's got recurring lines on it. So I'm going to go ahead and delete those.
Perfect.
All right. So I'll put in my invoice number and then what do I do?
So let's make sure the posting date is. Let's just use August 1st, just so we can make sure we know when we're gonna look at some depreciation and stuff. We'll make sure it's. So at this point on the type on the line, the
I'm
fun
going to
is
go
going to be.
cheat really quick too and make this
Ah.
8-1 because then I can stop typing 8-1. So by the way, you can change your work date. All right.
So let's do a drop down there on type and pick the word fixed asset.
Ah, that's pretty cool.
So now you get the fixed asset list. Now
Okay.
again, we just made a new one for an iPad, and we've got other things in here like iPhones and stuff. So why don't we can just pick any item we want. I mean, we'll just bring in or click new. Let's create a new one real fast. So we'll just click new, and you'll hit enter. Now let's buy another item.
I'm going to buy a big iPad.
Okay,
All right.
and
Choose
you'll
my
pick the
class code, which I think is tangible, right? And
yes.
you'll
That,
notice, which I am a huge book. See, I came from GP, so this little idea of like not typing anything in and it pre-filling to me is just super awesome. So,
and let's put in the depreciation start date again. We'll use August 1st just for simplicity reasons.
okay.
And 3 years,
3 years. All
and
right.
we're done. And we'll click OK.
Well, that was easy.
Now, again, we're making this easy for our presentation to everybody. Yes, we could have put dimensions and things like that, but for now, know that everything you need on the fixed asset. You can add your dimensions for depreciation and stuff like that, but you can do
Mm-hmm.
it after the fact, obviously. So here you are. You bought this big iPad for $2,500. Okay,
It's
on
expensive.
August 1st. That's expensive. And now let's see what happens. What if you click post now? Let's go and post this through and see what happens.
Okay. Okay.
Boom, it's gone. So let's
All
go
right.
back to the fixed asset list and see what we did.
All right. And don't forget you can always bookmark those too. So now I have a big iPad down here.
And there's
And
$2,500.
super cool.
So the nice part about, again, all of these the wizard or the purchase invoice, or if you want to do it through a journal, you can, don't get me wrong.
Mm-hmm.
But everything you're doing here, um, doing it through a purchase invoice just tracks what vendor you bought it from. So you'll see a transactional history that I bought it from vendor X, and you can
Mm-hmm.
trace back to the original document. Using the wizard, again, you can hit a GL account for clearing, or you could have picked vendor, and then you would have made a payable, don't forget. But
Mm-hmm.
you would think you'd want to go through the purchase invoice to do that. But again, It's a personal preference. And then you saw that the wizard goes to the FAGL journal because you're integrated. And if you're not, you would, like you mentioned, use the the fixed asset journal just to enter opening balances. So that's the other thing. So basically 4 different ways of doing this just to add the acquisition cost of an asset.
All right. Awesome.
All right. I think from here, I think it's time. I think it's the end of the month. It's August. Here we are. It's the end of August, and it's time to close the books. And I think let's have a little fun, and let's run some depreciation. So, in your search box, let's type depreciation, or let's type fixed asset depreciation, and let's see what comes up. There it is. Calculate depreciation, around a little about 3/4 of the way down. Now, again, you probably want to bookmark this because I know Tanya always likes to bookmark things. But if it's not on your screen, certainly bookmark it if you don't have it there, only because you'll always have to type the word calculate all the time. So here you'd enter the month, the ending date, just like you did, Tanya. Document, the document number, you can enter it, or it'll take it from the number series. Obviously, that's an option. The posting description, I always say, you know what? If I'm closing August, I'm going to type August depreciation, or something like that, just so it knows exactly what I'm booking. Let's remove that filter just so we can let's just run the system and see what happens. And at this point, there's really nothing more to do. Not many people do filters unless you're doing different sets of books. If you have multiple books, kind of like we taught in our first session where we can have multiple depreciation books. But since we're only talking a company book here, or the accounting books, let's click OK and let's see what the system does.
All right. And is there a way to do projections? Because in GP, we could always run a projection report to see what the depreciation was before we actually ran it.
Oh, yeah, absolutely. Let's click X here. That's a cool idea. Let's go back. Let's click the X to close this little mini pop-up. And in our search box, now magnifying glass, let's type the word PROJ. I think it's a period. And if you open up your reports section, I think it's down at the very bottom in the reports and analysis area.
Okay. Hold on 1 second. I have to switch to a different headset.
Okay. Well, we're allowed to do that. This is live, and we're allowed to make changes.
My headset died, so I had to switch. I'm like, okay, wait right in the middle of this. So, all right. So, do I see projection there? I don't see it.
Try go to reports and analysis where it says show all 6. Try that.
Oh, okay. So we're learning lots today. So
we should have in there fixed asset projected value. Another way of finding it, if you want to look at it, just if you type the word DEPR, which is just depreciation abbreviation.
Okay.
And then these are all the different kinds of depreciation reports, and actually there is none here. It should be called projected. It is.
I think I cheat because I usually go.
There it is. There's the projected value. So it wants to project the value. So if you clicked on that, here you're basically saying, please go out and project my value of my assets for a period of time, from a start point to an end point. In your case, you've got it from August 1st, 2020 through the August 31st of 2023. So you're going to have all of 2020, 2021, 2022. So you'll have many years over that period of time. Here you've got your posting date, posted entries from, again, August 31st. So we'll look at what was posted from that point forward. It could group totals. It's a cool, could you group totals by FA class, group totals by FA subclass. It's kind of cool. I'm going to drop it in there. You can look at it from a budget. Again, you can copy it to the budget, the entries. So let's say you're doing general ledger budgeting, and let's say you're the controller, the CFO, somebody comes to you and says, what's my depreciation going to be like for the next 4 years? And what you can do, and again, you don't have to do 4 years, but let's say it's 1 year. You can let the system calculate the projections, and it will insert a budget entry into your GL budget, as you picked your choice here, for that year in question, so that that entry is in the right GL account. Because remember, it's going to look at the asset. It knows what depreciation GL account to book to. It also knows if there's a dimension involved. So in case it has to be dimensionally, it will book it in there. So it's a kind of cool way of doing depreciation quickly using the tool, the function of the system. So
It's
cool toy.
it entry that I did not actually I didn't even realize that was there. That's a pretty cool feature. So it's updating my budget that I choose in this window.
Yeah, it's kind
Very
of cool.
cool.
It like makes a little insert instead of you doing it manually, which
Mm-hmm.
you know everybody does. Everybody
Right.
does it manually anyway. The controller or accounting manager always gives you, oh, here, don't worry about depreciation. I'll take care of it for you. But this thing can tell you what to do automatically. Um,
Very cool.
Obviously, print per fixed asset. I prefer that to make that true, and the reason
Mm-hmm.
being is if you do not make that answer true, it's going to give you a one giant line entry, and it's never going to show you the detail behind the asset. Um, it will project your disposal, meaning at some point, if there's an asset that theoretically could be disposed, it will certainly project it. Obviously, we're only doing a short number of years, and most of our assets, I think most of our assets will deplete in the third year anyway, because I think we're playing with iPads and iPhones and stuff. Um, Print amounts per date. So this is kind of cool. If you're a person who loves to see the detail and you say print amounts per date, it will show you like for instance every month's depreciation. So month, here's depreciation per month, here's depreciation per month. Here. So every day a transaction that it's projecting is going to book, depreciation will be one of them. It will show
Mm-hmm.
you that on the day it was booked. Use accounting periods. Again, it will basically match your accounting period dates to the accounting period table, and it will set those that's the day it's going to book the entry. So, for instance, if I'm a calendar year company, if obviously it's
Mm-hmm.
going to show you something on 11/30, 12/31, 8/31, so on and so forth. And those are what all those booleans or those true false options are that you can turn on. Um, it's pretty cool to preview. It's also pretty cool to send to Excel because obviously there's a lot of detail in it. But
Mm-hmm.
we can pick one here. We can send it to Excel, or we can basically open it up as a preview. Let's see. Let's go from there.
All right.
Let's see what it does. Here it goes.
It's crazy how fast it does it too if you open it in Excel. I mean, I'm used to, like I said, a smart list that's basically churning and churning and churning lots of pages out. This one is just super fast.
Yeah, I mean, I will say that
If I
it's
had
getting
8,000
faster and
assets,
faster. Yeah, I mean,
it would be a longer.
yeah,
But yeah.
but it's still fast. I mean, I don't
Yeah.
care if you have 100 assets, it still would probably come down relatively fast.
Mm-hmm.
So here you are. This is a perfect schema. You've
Yep.
got some simple transactions because remember, we picked 2020. So don't forget, it's looking at transactions that recently occurred in
Mm-hmm.
2022. The iPhone we bought. We've got depreciation that we're going to book. And it's telling you the number of days it's going to book depreciation for a period of time because that's what that column is that column is called days. And then basically it's showing you some transactions. And again,
Mm-hmm.
if you want it to be more detailed, meaning when I mean more detailed, if you want to see it literally month by month by month,
Yep.
then one of the questions that was asked was how many days is a month? Obviously 30 days. You could put 30 days just to even it out, being instead of being, there's no way to pick 28 days for February and 31. So you pick like 30 days just to make it even. But you can actually put the number of days per month, and then it'll basically show you like January, February, March, April next year, January, February, March, April next year, and it'll show you all the monthly entries it's making. Your
Mm-hmm.
projection summarized it to show you it in summary. So that was a cool report, and I like it. I think auditors might ask for it, like show me the next year. They like to
Right.
prove it's out. I think it's a cool projection report just to make sure that the information is accurate and valid.
So it was the fixed asset projected value. It did show up with the PROJ. We just didn't see it down there at the bottom. So
Yeah.
which one would I do? Is that the print per fixed
No, so
asset?
go up a little higher, and
Mm-hmm.
where it says number of days,
Mm-hmm.
so there, obviously, is if you highlight the word number of days, just put your
Mm-hmm.
mouse over the word number of days to bring up, yeah, so we get the little, so this says specify the length of the periods between the first appreciation date and the last appreciation date. We're not going to do that because I don't want to calculate things here. But if you go to the next box below it, says number of days in first period,
Mm-hmm.
and highlight that word just so we can show everybody what it says. So here it specifies the number of days that must be used for calculating depreciation as of the first appreciation date, regardless of the actual number of days from the last appreciation entry. So in other words, this is looking at like 30, is the first one 30 days, 31 days. By book showing you this, filling these things in here,
Mm-hmm.
you should get it by period. I always put I don't put the number of days. I just put the number of days in the first period is 30,
Okay.
and it basically should show you it by the period of time.
What is
It
the
should.
posted entries from?
So that looked at the entries from. It went back in time and said, give me every entry from August 31st, 2020. If you remove that, it
Mm-hmm.
will only it'll well you need an entry. It'll yell at you if you don't have something.
Mm-hmm.
So let's do 073122. Because we were playing with August 1st. So let's just go and let's preview this right now. Let's see what happens. And we can, there you go. So now we've got, it's, why is that
No,
a
it's still
bug?
the same way. Yeah, I noticed that too.
Yeah, why are you giving me 300, giving me 1 year? So you're giving me 1 year for the year of 23. That's not good. You're not
Mm-hmm.
showing me 2022, which means we entered it wrong. Maybe it's my answer to the question.
So I
All right,
have
so
it. My first depreciation date is the
oh,
first.
which
Oh,
is
you
fine.
know what? Is it through the whole
Well, that's fine because you're going. Why don't you put 12/31/23 just so we have a full year? Um, and
22? 22?
yeah, 22. Yeah, let's do 22,
Okay.
and then 731 print per asset. Then we're not going to have any disposals anyway. Print per date, and use the accounting period. So let's try. Let's see what happens now. It should give you a full view of. And we can just use. It'll use the date anyway. So let's try that.
Yeah. Oh,
And
that's
we've
even.
got. So 149 days from August. Okay, so it did 30 days for the month of August
Mm-hmm.
and 149 days from September 1st through 12/31/22. But it didn't break it down. That is not supposed to be. It should show you
I know. I'm
monthly
used.
transaction.
I usually see the monthly transactions too. I'm like, oh, that's interesting.
Why is it not? I wonder if we're hitting. I wonder where are we being? Is it Saturday and we're losing our minds
And
together and
it's
we don't have
not
enough.
working. I know. I'm like, wait a minute. Something seems strange about that. It should show it by month,
We don't have
but I
enough
think
coin.
I don't know if I normally choose that or not. Posted entries from that date. I'm not grouping my totals. I'm not doing a budget.
Can do me a favor,
Uh huh.
highlight. Let's see what this one
There
does.
you go.
Up there you go.
Yeah, it was the other box. Because I was gonna say,
I
I
was going
think
to
I
say,
always choose the other box. So there you go.
there we go. Now we got it by month, and you're
Mm-hmm.
getting it. Every month, every fiscal, every 30-day month, and the last month being 29
Yes.
to calculate. So
So when you're doing that projected report,
yeah, my
we
bad.
would
Pick
want to choose the number of days is
number
what
of
the
days
number of days is what I
per,
do. Yeah.
yeah,
I didn't
per month.
realize
Per
I do
month.
that, but I do, obviously.
There we go.
All right.
All right, so we've projected our depreciation. We've acquired some assets. Now let's just run depreciation again. So let's
All
just
right.
do our depreciation, which is right there. And you've got your August. The posting date should be end of the month, August 31st. And again, let's change our posting description like we had the last time. And we'll
Okay.
remove our filter. You don't need our filter there. And we'll say okay. And no other filter needed. It should run and it's now it gives you a message. It says
Mm-hmm.
depreciation has been calculated. 8 fixed assets are now sitting in the GL fixed asset journal ready for you to post. So let's say yes to open it. And
Let's open it.
let's see what it looked like. Ah, look at this. So a nice clean journal showing
Mm-hmm.
you asset on the top on one row as a minus because that's your accumulated depreciation, and the second row is a GL account booking it to a debit there to um,
10800, which is what every single entry is posted to in Kronos.
which is always the fun part, even though it should go to a depreciation account, but it doesn't.
Right. Yep.
So sadly, that's what it does.
Mm-hmm.
And again, it looks like it looks like an oxymoron, but in
Yep.
terms of the way it looks. But all in all, you can do. Remember, we said earlier, I think you brought it up that we can do dimensions. So there's a
Mm-hmm.
couple of dimensional entries that one of our assets or two of our assets had available to you. Again, if we did post this, which we'll try, as long
Yeah.
as the GL accounts don't have that mandate, it should go through without an error. And then you and
Ah, I like that one.
look at that. We've got a master asset and a child asset. And we turned it off. We must have turned it off during our playing. So let's
Mm-hmm.
go fix that. And let's go fix that in our FA setup real fast.
Okay.
And the boolean is on the left side where it's right there. So we have to say allow.
Okay.
And now we should be able to go back one screen and click the post button one more time.
And you can also hit F9 for that usually too. I always forget that. All right.
Look at that. We've got now let's
Woohoo.
check one of our assets. Let's go back and see what it looks like. I'm kind of curious.
And I am going to go ahead and bookmark that little guy too. All right. So we'll
Uh,
grab the big iPad down here.
oh, good.
Oh, wait.
Look at that. It went down from 2,500 to 2,431. So we had $69 of depreciation for the month of August for our 3-year assets. Notice the number of depreciation days is always shown
Yep.
every time you book depreciation. It does tell you how many days it calculated. So that just in case you have some obscure starting depreciation date, there are people who do depreciation from the day they acquired it. So on that day I acquired it, the 15th of the month, the 22nd, most from an accounting perspective, I mean, a lot of people will just either say I acquired the asset mid-month, beginning of
Mm-hmm.
month, and that's the end of it. Because again, if I bought it on the last day of the month, then I'd probably want to start depreciation maybe the next month because a 1-day depreciation, you could do it. The system has the capabilities. You can see the number of days are right here. So it is pretty smart. It will book the correct number of days that you've told it to.
And
This is great.
if you're asking the questions about the setup of that, you can go back to the first video, which we detailed all of those little switches out, and you can kind of see what each one of those does. All right, awesome.
This is great. I mean, I love it. We got some depreciation. We've
Mm-hmm.
acquired some assets now. We've projected our depreciation maybe through the end of the year, or we can do project it through the end of next year. Again, we can always look at things. We smacked ourselves on the hands because our batteries ran out for our mics, and then we had our error for we put the 30 in the wrong box. So shame on us. We've had a little fun here. So where do we go? So we have options now. So the big option says, I've got this beautiful big iPad,
Mm-hmm.
and you know what? I don't want it anymore. I want to dispose of it. What do I do? So what
Okay.
can you do? And so I could sell it to you, Tanya. I could say, hey, Tanya, you want to buy it, and you can buy it. Yes, over time it could be fully depreciated, and you just want to, it's so old that it's broken. You can certainly remove it from the books.
Mm-hmm.
Which way should we go first? Do we want to sell something first, or we want to just like get it off the books? Which way do you want to fly?
I have never sold an asset, so I think that's kind of interesting. I'm gonna guess that it probably will not post just because of our posting accounts, but let's try it.
Heck, I like to try it. That's the fun of BC.
All right.
So let's sell something to somebody. So let's pick one of our
Oh,
favorite customers.
well, I gotta pick a different customer because I spelled him wrong. Trey. All right. Mr. Trey's in there.
All right, we're going
Okay.
to sell Trey. Let's pick fixed assets.
Wow, this is super cool because I've never seen the ability to do this one.
And let's pick the iPad.
All right, so we're selling him the big iPad. Okay.
And let's say, just for this conversation, we know it's $2,400. Do we want to sell it for more or less than $2,400?
Well, there's inflation right now, so let's sell it for more.
All right, let's sell it for $2,800.
Okay.
Okay, so a couple of things. This is
Mm-hmm.
gonna obviously this is gonna book a receivable, which we know because Trey's gonna owe us money. So let's leave that for a conversation for another
Yeah.
day. What we're concerned about is really what's going to happen to that beautiful fixed asset. So
Mm-hmm.
let's go through and let's post this. Let's see what it's going to do. It's going to book it. Let's see what entry it does, and we'll talk out loud about the entry.
Okay. All right, so I'm going to try to post this.
Yes.
Okay. So if I hit, do I want to post this invoice? Ah, okay. So it says the disposal date of the fixed asset must be the last date in the depreciation book code company.
Let's go back and let's see what date we were buying this. So let me go
Okay.
look at. Let's go look at what the.
Should be 8/1 when we
Well,
bought this.
we bought it on 8/1, so let's pick 9/1 to sell it if we could. So the date.
Oh, okay. So change the date on my invoice.
Yeah, change the date of your invoice that you bought it. You're selling it the day after we just booked depreciation. So let's,
Well,
you know,
Okay, so
or
let me go
pick
back in
nine.
here.
You can pick 9/15 too. It
All
does
right,
just pick any day after
I'll choose
September.
9/1.
Okay, and
Okay?
make sure the posting date's 9/1.
Yeah, I always forget that, but I usually try to change the posting date first,
And then it'll
and
go back.
then it'll automatically change the document date. Yep. So let me post that. Okay? Look
All
at
right,
that.
look, we just sold an asset. So what happened? So
Okay?
let's go to the fixed asset. Let's see what it looks like.
All right.
So right now it shows 0, which means we
Okay.
sold. If we open it up, it'll show you the transaction. And it does show it in long form. So let's start off with the proceeds line, because remember, the only two lines we saw before were an acquisition and depreciation. So
Okay. Which are
let's work our
these
way
two
down.
here. Okay. And
Yeah.
now I've got these four.
So
Okay.
you got your money,
Mm-hmm.
$2,800, right?
Yep.
We have an
Well, he
acquisition
hasn't
of
paid me yet, but yes, I sold it to him.
right. So then we've got an acquisition of $2,500. Now we have to reverse that because we have to take it off the general ledger books. So we dispose, and that's why the FA posting category says disposal. It's
Okay.
telling the system I'm disposing of this entry. The bottom line is disposing of the accumulated depreciation entry. So those two lines reverse out the top two lines. And
Okay.
the difference is the gain or loss.
So
So
these two right here reverse out the top two lines.
yes, and that's what's
Okay.
always going to happen on a disposal. Your acquisition and your accumulated depreciation will always reverse itself when you dispose of an asset.
Okay.
The only thing left to worry about is am I getting any money for this, or
Mm-hmm.
am I not getting any money? If you get money, there's an entry that shows I got money, which is the $2,800, and there's always a gain or loss entry. And the
Okay.
only way you calculate gain or loss is very simple maths, and that's $2,800 minus $2,500 plus $69, and then that comes up to $369.
Okay.
You must always net the acquisition and the accumulated against the proceeds to come up with, did I make money or did I lose money? In this case, you made money. Now you're probably saying, but Steve, it shows negative. How is that making money?
Mm-hmm.
From an accounting standpoint, a negative number in the gain or loss account is a gain, meaning you made money, because it's like revenue. Revenues are always credits to the income statement. So
Mm-hmm.
is this. You made money, so it's a gain. It's a negative entry.
Got it.
If it was a debit, you lost money because now you're being. So if I sold this for $2,400, we
Mm-hmm.
would get smacked with about $50, $40 ish, or a little less than $40.
Right. Well, very cool.
Yeah, this is cool because, there are a lot of people who leave their assets out there, for a long time. And then, of course, they sometimes they're so old, they'll throw them away because they're so old. Or maybe
Mm-hmm.
they're just given to their employees free of charge, of course. But you still need to take them off the books, which is kind of cool because you can go then use what you taught us a little while ago, which is you've got your fixed asset general GL journal, and I
Mm-hmm.
can just take an asset off the books just by using this entry here. I can do the exact same entry you did on a sales invoice, but for no money and for no gain or loss because it nets to zero, and I just want to take it off my books.
So if
So
I was now ready to take that small iPad off the books, wouldn't I come over here and put this entry in and then I would minus it for what I paid for it? Wouldn't
so
that
you
what I would do?
so go under FA posting type, which is next to the word company.
Okay.
You see the column next
Oh.
to company. Whoop, go left a little bit, and right there. Whoop, you just
Oh,
passed
right
it a little.
here. Mm-hmm.
No, the one called FA posting type. It's
Oh,
next to
sorry,
the word.
that one right there. Yep.
All
Okay.
right. So first, pick disposal.
Okay.
Okay, now we're going to dispose of this asset. So we have
Mm-hmm.
two options. Option A says I can dispose of the asset and go in here and put a zero, meaning I'm going to make no money,
Mm-hmm.
and let the system book a huge loss because you remember you spent $1,200. We've only got a month of depreciation, and nobody's buying it from you. But
Okay.
if you want to dispose of it and make money, okay,
Mm-hmm.
meaning you're selling it for money, you can come in here and type in uh, the amount of money. You make sure you're disposing it, but you're hitting like a receivable or a bank account and your balancing account.
Okay.
You know if you're going to put money in here, you have to make sure that that money goes somewhere because the system's going to say, where does this extra money go to? It's going to want to pick up a home. Is it somebody just handed you a check and you need to just book a quick check? So you'll put some money in the. So
In a bank
let's say
account.
somebody gave you a check for, $50. Let's do that. Let's put a checking account and type in -$50. So somebody just gave you $50 for this asset,
Mm-hmm.
and we're going to dispose of it. And again, we're going to make sure the date on here is 9/1, just on the posting date, because we want to do it after because we
Whoops.
just booked depreciation. And now let's see what happens after we post this. This is going to be kind of cool to
All
see
right.
what
So I'm
happens.
going to preview the posting on this. Yeah. Okay.
So this made 4 entries, right? So we saw
Mm-hmm.
4 entries before. Let's see the 4 entries again. I had $50, which is, it went to a bank account, 50
Mm-hmm.
bucks. I then took out $1,200 from my acquisition, $33 of depreciation, and that last line that's a loss because we didn't get enough money to cover everything. We only got 50 bucks, so we made a loss of $1,117 on disposing this asset. So
Got
um,
it.
it's
And
pretty cool.
And so when I first started doing this, I actually would think that I would, if I was disposing, I would come in here and I would say, okay, I'm just going to put in there $1,200 because I'm disposing it. And I always, it took me a little while and some watching some videos that when I previewed that posting here, then it would always yell at you and basically say that it was out of balance. And I was like, okay, this makes no sense to me. I'm doing that for 12. I'm taking it all off the books. And that's where, like you said, the key thing there is you're not making any money. So you're disposing of it, but you're not making any money. And if you do this, and then you come in here and you preview that posting, then you're actually going to see that it actually does dispose of the asset.
Yeah, it'll dispose of it with 100% loss,
Yep.
and so you'll have 100% loss, but at least the assets off the books. And
Right.
um, that's why a lot of people, like I said, assets come and go. They're
Mm-hmm.
old, they're decrepit, you throw them in the trash can. Um, that's why they'll figure out what assets they need to take off the books. They'll come here, they'll just type
Mm-hmm.
all the numbers in on a giant screen with 0000. They'll press post, and they'll get rid of like 50 assets because they're so old and we threw them all away, kind of thing. Like,
Right.
whether like old computers or furniture that's so super
Mm-hmm.
old you just throwing it, throwing chairs and stuff that are so old that you're throwing them away, things like that have they've been fully depreciated 3 years, 5 years, whatever it is, and it's a quick way to clean the books. And this is,
Hmm.
and it does it. Remember, we're integrating with the GL system, so it's taking them off the books and taking them off the subledger here.
Right. All right. Well, is there anything else we wanted to show everybody today on this?
Let's round out our conversation just with a little conversational show and tell. So
Okay.
there are two things you can always do with assets, and it'll happen. It's not that it's rare, but it will happen over time.
Hmm.
One example is like take a forklift, for instance.
Okay.
Forklifts or tractors
I don't drive those very often, but okay.
um, or maybe even a piece of manufacturing equipment. So
Okay.
let's say you had to replace the engine of something, or
Hmm.
the main components of something that has some significant value of something. So let's say I replaced an engine, or I replaced again some sort of engine to something like a snowblower, let's say, or a tractor, and let's say that engine cost you $6,000.
Hmm.
Now, obviously, you would have a bill. You'd have a bill comes in, you pay the whoever it is you replace the engine. So what happens is, let's say you bought this. I'll use a tractor.
Okay.
Many years ago, I bought a $25,000 tractor. Years go by, depreciation, depreciation. All of a sudden, the engine blows. It's going to cost me $6,000 to replace something, rather than spend, say, $40,000 to get the new tractor, because inflation and everything like that. So you get an invoice for $6,000. You can book the invoice, and you can choose a FA posting type of appreciation. What would happen here is, it would take the $6,000 at the time, the day you're posting it. So let's say I'm posting this on 9/1/2022, and make believe this asset's been around for a long time. So as of 2022, 9/1/2022 forward, it will take the additional 6,000. It'll take the remaining life of that asset and calculate how much I'm going to basically depreciate for the correct number of periods left in time, because I'm appreciating the asset. It's got more life, more value to it. Um,
Okay.
there are different people, different schools of thought. Some people say, that $6,000 just gave me another 10 more years of life, or something like that. And
Hmm.
again, it's a personal. I think of it is that if I'm gonna get a new engine, and maybe industry says a new engine gives that tractor 4 more years of life, then I need to make sure that the remaining life of that asset is 4 more years from the time I bring in that $6,000. Some people book it as a separate asset and let it depreciate
Hmm.
4 years, and let the
Okay.
remaining life go back. Let the tractor sit on its own span. But you can appreciate an asset, which will then, of course, add value to it and depreciate it over, to add those additional costs and book it and depreciate it, of course, accordingly. Um, it's probably asking you
Oh,
for a balancing account. That's all. Why don't we put it to that clearing account we were playing
yeah.
with earlier? Yep, when we book it there, because obviously the bill is going to go against that.
Hmm.
And there we go.
Oh.
And appreciation account.
That
Look at
wouldn't
that.
surprise me.
We didn't play with this, I guess, on when we were
Right.
playing in our first video.
Hmm.
So we're missing our appreciation account of where those dollars go to for appreciation of an asset. Obviously, you're going to put it to the same home of the asset in and of itself. So, in our in on when we go into our general posting
Oh,
setups, yep, go to try, yep, right there, and posting setup, and we probably didn't put it in at all. Yeah, we left. I'm sure we left it blank. Um, do a personalized to show an additional column.
so this is where I say to it's crazy how many of these are in here. But if you do get into this window, I don't remember if we spoke about this, but there's a lot of accounts here. And one of them being the sales account, sometimes that it definitely is an account that that is set up for the most part. So you will want to make sure that you have those set up if needed.
100%. I mean, I I don't like the fact they're not all showing. I mean, I
Mm-hmm.
know it sounds funny
But there's
because
so many.
I've always wondered why don't you just show me them all and
Mm-hmm.
let me go from there. But I know screen space is real estate, as one would
Yeah.
say, is not, I don't have a 90-inch screen, if you know what I mean. So um,
Right.
I get it. Um, the other thing to mention, we just appreciated your assets. So we brought up some value. We did an
Mm-hmm.
appreciation, which is wonderful. And then
Mm-hmm.
again, it'll depreciate that new appreciation over time.
Mm-hmm.
And of course, you could do the flip side. And we don't have to show them the flip side here, but again, just like you did an appreciation, there's a drop down on the FA fixed asset GL journal or the fixed asset journal, depending on if you're connecting to the GL, called write down. So a great example of a write down is, you know, time goes by, you've got this, crazy asset. Maybe you've got a bill, it could be a building, it could be whatever. It could be a car. I mean, I'm not saying cars have gone up, appreciated given COVID and everything like
Mm-hmm.
that, because cars are rare with the chips missing. But there could be this asset that you bought a few years ago, and for whatever reason, it's basically been,
It got wrecked.
it got
Now
wrecked.
you're gonna write it
It,
down a little bit.
you're going to write it down a little bit, and you're going to take basically the expense hit in the year you write it down, and it'll depreciate the remaining value over the remaining life of that asset. It
Mm-hmm.
happens. There are things that I'm sure your accountants will tell you if there are certain assets that have to be written down because of whether it be age or whether it be whatever, for whatever reason, it's just not the value that it's on the books. Um, and again, I'm sure you'll coordinate that with your accountants and or tax accountants, because obviously if you're going to take a write down, obviously there's tax implications because you're going to take a hit right then and there. Those are the two major things we wanted to talk about just openly, just a conversation piece. But I'm glad you showed the appreciation entry one. That was kind of cool
Mm-hmm.
for our friends watching this. Um, that's everything on fixed assets. I mean, it really is kind of cool. I know we talked a lot about other things, which we're not really going to show here, like maintenance. You can play with maintenance and insurance. But again, we spoke about that in our second video, just a little bit. We spoke about how you can track a few things there. But overall, this is how easy fixed asset is really to run on a monthly basis. I don't see why anybody would not want to play with it or use it. So.
And the only thing I'll add, and I don't remember if we actually spoke about this one, but because I know we're getting along on our time here for this one, but the report that I use a lot of times is that, and I know we didn't go over a lot of reporting, was the FA book value is the report that I use. And then just making sure you print that per asset. When you print that, just because otherwise you will see, like you said, Steve said on the depreciation, you'll have just one big lump sum basically.
Yeah, this report that Tanya is showing you is being an ex-accountant and now implementing,
Mm-hmm.
BC. But this is my Bible.
Yep.
When the auditor comes in the door, just have this ready for them. Starting date is 1/1 X year that you're doing it. Ending
Mm-hmm.
date 12/31 X of that year you're giving them. Here is acquisition, right? So I got my acquisition cost in column
Mm-hmm.
one. I've got all my additions for the year. Again, calendar year. I've got my disposals that I did in my calendar year. And then of course it nets together. Then all the depreciation for the year, and then all my disposal depreciation for the year, and then what's my net book value. And again, per asset, per GL, ties everything out, makes the accountant happy, and one less thing for you to worry about.
Yes. There was also another window. I think it was the fixed asset posting type, which I ran into this, I think just about 3 months ago. And because I think I was just playing again. And this was another one that I actually thought was kind of cool because it's essentially that same report, but I can see it in this window.
And it's so funny. It's so many little toys that you and I
Yeah.
play with all the time, and we find these just by happen chance. It's like
Yep.
you're like, what does this thing mean? And like you don't really go there because maybe you just don't want to, or you never had to.
Why would I
But
go to a
that,
posting type over? I mean, like, what the heck does that even mean? And then I'm like,
right.
oh,
And it's funny. You would think maybe the word here should have been book value overview
yeah,
matrix
yeah.
instead of so, because you ran a report called book value, which
Mm-hmm.
actually are these columns, and yet
Mm-hmm.
they should have just said view book value overview matrix. and you
Yeah.
would have got the same information, which it's kind of cool that I could do it here. I mean, I wish you
Yes.
export it to Excel. I know, oh, but now you can.
You can open it in Excel now. So
There you
that
go.
same thing. So yeah, I ran into this too, and I was just like, well, that that's my book value report right there. I'm like, that is so cool. Yeah.
So it's
So
so
just
many
another
little
little
joys.
tip.
Absolutely.
So
I love when we find these things together.
I know. All right. Well, if we don't have anything else to go over, I think we can tell everybody to have a great day.
We can, and then we can see them next time on another topic.
Yes, absolutely. Well, thank you for joining us. And we're not sure what we're talking about next time, but we will come up with something. All right. Thanks, Steve.
Thank you, Tanya.
All right.